again, our objective is to identify these resilient cash generative businesses where the upside on the winners can more than offset the occasional disappointment. We've had the opportunity to participate in several podcasts and investor discussions over the years. We really enjoyed sharing our ideas and discussing our approach. So we did this podcast with the Investors Podcast, talking about our strategy of buying growth companies at value prices. We've also done the Acquirers Multiple Value After Hours with Tobias Carlisle and Jake Taylor, and we did Talking Billions with Bogomil Barnowski. And I would say that if anybody's interested in our strategy or approach, you can review these and really get a good flavor of how we invest.
So today we're going to talk about a company in the UK. We're finding a lot of really interesting opportunities in the UK. Why is that? Well, the UK's been in like a recession for I don't know how many years in a row now. The economy's been really weak over there. A lot of political uncertainty. The macro is very negative. But we found some really neat business models and management teams and balance sheets over there that we like with moats, and people aren't really paying attention to them. Capital has increasingly flowed to the higher U.S. growth markets, particularly large cap technology stocks, and a lot of these businesses in the UK trade at huge discounts to comparable U.S. companies, despite similar business quality and cash generation. And it potentially, if you're concerned about the S&P going forward and the huge part of the Mag 7 that makes it up, and SpaceX and other things, this is a sort of interesting place to deploy your capital that we think is going to have less risk going forward and better upside.
Some of the reasons, just limited analyst coverage and institutional ownership, are creating inefficiencies in undervalued UK small caps. Again, we're finding numerous undervalued UK companies with great economics and great fundamentals. Additionally, strategic buyers and private equity firms have increasingly acquired undervalued UK listed companies, so the M&A appetite over there has been increasing.
So the company we're going to talk about today is a company that some people may have heard of. It's called 4imprint Group. It's based in the UK. It's a leading direct marketer and distributor of promotional products serving small and medium businesses in North America. It's the largest player in the US industry by a meaningful amount. It provides a really broad range of customized promotional merchandise, apparel, drinkware, bags, writing instruments, etc., with logos on there. The company was founded in 1987. It's headquartered in London, but 98% of its revenues are generated in North America, in the US and Canada. So it's a lot of the investors are in the UK, even though the business is in the US. So there's an opportunity there where people aren't paying attention to it being more focused on the US, which is a stronger growth economy going forward.
So this slide is to show the power of the 4imprint brand, which we'll talk more about throughout our presentation. You can see all these products here. So you can see these products are largely commodities, not super exciting, but the value proposition of 4imprint is they're selling certainty and service and reliability for the customers rather than just the products. So we're going to play a short ad just to show how management wants customers to be thinking about the 4imprint brand.
Oh, and I need these items printed with our logo by Friday. Certainly. Are you 4imprint, sir? Well, we are 4imprint. Certainty matters. Like the certainty of finding the perfect promo gear for gifting at 4imprint. Exclusive items and quality brands to wow your clients, your customers, and your team. Delivered on time. Go to 4imprint.com and find some wow now. 4imprint.
So I was saying 4imprint is like the Amazon of promotional products because they act as the middleman connecting customers and suppliers through their dropship model. So suppliers are largely holding the inventory and they ship directly to customers, which allows them to be super capital light and generate extremely strong returns on capital, which we'll talk more about.
So 4imprint, as we alluded to, has a lot of characteristics that we like in our investment. We think the business model is highly resilient. It's the market leader, and it's got a strong history of market share gains. It can do things that other players in the industry cannot do. The business model is super asset light. As Abby said, it's really kind of the Amazon of promotional products, where it inserts itself between the end customer and the supplier, and it does things that don't allow potential competitors to underprice it, because certainty is more important. It has exceptional free cash flow generation, very, very high returns on capital. We think it's a long-term quality compounder that's at a very attractive valuation. It does move up and down with the economy, the promotional products industry, but it's going to grow at sort of 3 to 5% over the next 5 years on average in the U.S. and Canada. And 4imprint on top of that will take share. Got a Fort Knox balance sheet, super strong balance sheet, very limited assets required, limited working capital. They have a very disciplined marketing engine and analytical approach that drives their customer acquisition and market share gains, where they know what the value of the customer is, what they're paying to get that customer revenue, and how long they keep the customer. So all of this results in sort of with the drop ship and the relationship with suppliers. They have a very strong relationship with these tier one suppliers because they're the largest player in the industry. So when you have a situation like COVID, where you got a supply chain issue, they tend to be first in line getting served by the customer. This creates a flywheel, which also is driven by the powerful amount of marketing spend, which is far beyond what any other player in the industry spends each year. And these little competitors of theirs that are highly fragmented can't have the budget to spend that kind of money or have a national profile. And we really like that their customer base is very highly diversified. It doesn't depend on any one customer or end market. And so this all comes together to create kind of a long-term resilient kind of flywheel compounder model, we believe.
There's several other characteristics we like about 4imprint. Their gross margin resilience has demonstrated the strength of their business model. Again, 4imprint sells certainty, not just simply promotional products. So they're really more of this integrated promotional products solutions provider, as opposed to only selling the products themselves. And ultimately, 4imprint has the potential to grow for several years and become a compounder, which of course is what we look for in all of our investments.